Hello everyone, hope you all are staying cool because it's been freaking hot, and in today's video we're going to deliver some hot stuff. We're going to talk about creative lending programs that are available today in the market that are helping a lot of buyers and a lot of borrowers that traditionally will not qualify for a regular conforming mortgage with the traditional banks, and these programs are putting a lot of people in homes. We're not going to discuss how the workability of the market is on the backside and who's buying these loans and how they're coming. For that, you can check out one of our videos. It's called Behind the Banker's Curtain, which will explain to you how the mortgage industry works in the United States. But just to simplify it really quickly, I want to say that these programs are available. A lot of banks are providing these programs. There's usually wholesale lenders or some new banks that are coming. They're emerging in the market in today's marketplace, and a lot of these loans that are being securitized in the market are usually being bought by private hedge funds, and they're not bought by Fannie or Freddie Mac. So that's that for you. But today's video is going to be we're going to get down and dirty. We're going to talk about the actual practicality of these products and how we're going to talk about some real life examples, how people that were not qualified were able to get qualified and get a home. So we're going to talk about two main programs in today's video, which the two main programs are, the first one is owner-occupied program under the let me take a step back. Before I go into the program, I want to tell you what these programs are actually called. These programs are called, in the market, they're known as non-QM programs, subprime programs, non-conforming programs. And what that means is these programs don't follow under the Fannie Mae and Freddie Mac guidelines. They're private guidelines, usually private investors that are putting these programs and these solutions out there for you to get a home and have viable solutions. Available to you to get a deal. Before we dive in deeper, I want to say that these programs are not the same programs that you saw pre-recession. A lot of things have changed since then. Now this program, especially the owner occupancy program, which falls under the QM umbrella, is under the CFBC, and they follow the ability to repay. So underwriting guidelines are very strict. It's not like how it used to be where you sign a paper and you get a loan. These are underwritten in a very strict manner, and they're not done the way they were in the old days. So let's get down to it. We're going to start with the owner occupancy program. So this program is really helping people that say, for example, own a business or small business, and they're not able to provide tax returns or pay stubs, and they're not traditionally paying themselves through a pay stub. They're usually a Schedule C, just small businesses that are not able to pay themselves. So this program allows you to use something called a bank statement program. So what you can do is you can provide 24 months to 12 months bank statements. You cannot be anybody who's just getting money from random source and say, hey, here's my bank statement. You have to prove that you're a business here in the United States and what your business purpose is and how you're doing the business. You have to write in a letter of explanation and explain to them this is what you do, and you'll be able to take advantage of this program. Another thing really cool about this program is, say you've had some sort of unforeseen circumstance, you've had a bankruptcy or foreclosure, and you want to buy this house, and traditional lending is saying no to you, but you're economically perfectly sound. Well, this program will allow you to go and buy a home. Now, the rates on this are going to be a little higher than your non-conforming, but they're very competitive. You'll be surprised what the rates are. We're not going to talk about rates today. We're going to talk about just the benefits of these programs and how these features can really help you if you are in one of these situations or one of your friends is one of these situations. Moving forward, these programs also allow different options to you. So you can do a 7-1 ARM, a 10-1 ARM, a 30-year fixed, and there's no prepayment penalty. No prepayment penalty. What that means is if you refinance in a year or 2 years or a year and a half, they're not going to charge you any premium for this. You're going to get out of it and have a normal mortgage. Non-warrantable condos and condotel. This is a really, really cool aspect of this product. So if you're looking for to buy a condo or a condominium in a community that has owner occupancy that's less than 50%, well, and if you're looking at it from a traditional viewpoint from regular lenders, they will not lend on a condo that is in a condominium community that has less than 50% owner occupancy. This program will allow you to go in there and buy. Condotels, I didn't know what that meant until a few days ago, but there's a huge market for condotels in San Diego, Miami. Condotels are, it's a functional hotel that has a room in that hotel that the hotel or that investor, whoever owns that spot, is selling. So the hotel is still functioning, and they have rooms in there that are fully furnished What I mean by not furnished, but they have a kitchen in there. It's a regular house. So a 2-bedroom, 1-bedroom condo in that particular hotel. That's called a condotel. Very popular in San Diego, very popular in Miami, and it's very popular in your resort areas. Not very popular here in the Bay Area. So this also allows you to do that. Then you have risk adjust pricing. So if you put more down and your credit score is good, it's very simple, self-explanatory. Your rate's going to be very competitive. It's going to be better than if your credit score is not as good and you're not putting as down. We already talked about the prepay, so no prepayment penalty on these. Next, you have the non-owner occupancy program. This program is primarily for people that are renters and are looking to either refinance their rental property and they're not able to do it because the traditional lending is not allowing them to do it, or they're looking to purchase a property and they're not able to purchase because there's something going on there. Off the bat, all of these are minimum. They're going to be a minimum requirement of 20% down. This is an asset and credit-based loan only, which that means is they're going to look at the asset you're buying and they're going to look at your credit score. They're not going to look at your income. That's a really cool aspect of this loan. Next, you have no fixer-uppers. If you're looking to get this loan and fix your property up and there's a lot of deferred maintenance, this is not your loan. This house has to have pride of ownership. You have to be able to like buy it and live in it right away. It cannot have major things wrong with the house. Then also, this loan gives you options just like the other product did. Gives you a 3-1 ARM, gives you an interest-only option, gives you a 5-1 ARM, and this all amortized over a 30-year loan period. Really cool aspect. The last point there is you're able to take ownership in the name of an LLC, trust. If you're an individual, you can do individual ownership. This program is really cool for, say, investors that are getting together to buy a property. Well, you can take ownership in your investment LLP or LLC, whatever you have there. You can take ownership in that. After watching that, I'm sure a lot of you are thinking, oh no, this is gonna F up the market. What's going on here? These programs are gonna mess everything up. Well, these programs are really available to help people, to provide you with an alternative solution. Guys, there are more than 20 million sole proprietors out there in the United States that are working their butts off, providing for their family. Not only providing for their family, they're providing you with a lot of value and a product or a service, but they just are not paying themselves due to a lack of education, or maybe they're new in the business. And these people have the right to buy a house. They're just like you and I looking to buy a house. So these programs are providing a service for these types of people that are just normal people who are living in America and trying to live the American dream. So I'm not an advocate of these programs. All I'm saying is this is allowing us to think outside the box. And I'm gonna give you two real examples that have happened here in our brokerage. Number one was this lady that had just gotten a divorce, and she was separated from her husband. She's gonna buy her own condo, and she was not able to buy that condo. When it came down to do the loan, the lender said no because she had 2 mortgage lates, and those mortgage lates happened because the mortgage was on the husband's name. I don't know the whole nuance or the whole situation, but he did not make that mortgage payment on time. Now, this lady was an executive in a firm, and she had great income and everything, but the lender denied her. So what did she do? She got a non-QM, non-conforming mortgage, got the condo, and after a year and a half later, refied because there was no prepayment penalty. She refied, and that was it, and she was able to buy a house. Second example is of an older couple who was retired, and they have a lot of equity in their house. They're not getting a normal, I shouldn't say normal, they're not getting enough income to get a loan or get a cash out from their house because they're just getting maybe bare minimum Social Security or some pension, which is not allowing them to get money out. And they have a business proposition from a friend who's asked them to invest some money with them in a coffee business out in Kenya. So what do? They go with the non-owner occupied program, get the money out, and invest in it. Now, be mindful that if you're gonna go with a business purpose loan, you have to do your homework. You gotta look at your margins, and you gotta see what your return on investment is. If you can take care of that, these are very, very nice and awesome solutions out there, putting a lot of people in homes and helping a lot of people out there. That's it for today, guys. If this video was insightful to you, please don't forget to share, like, and comment because we love to hear from you. Here at Optimal Homes, it is our goal to make real estate and lending easy to digest so you can go out there and make profitable decisions. Don't forget to follow us on all of our social media channels. Until next time, this is Karan Singh with Optimal Homes. Thank you for watching this video, guys. We discussed a lot of cool information today under the QM umbrella, and there were some more things that I wanted to talk about, what I just couldn't because the time of the video was getting really long. I know a lot of you have asked me, have DM'd me and asking about investment programs and how you can really go out there and how you can start a buying and flipping business, or how you can do your first buy and flip. Well, next video we will be discussing just that, what you need as your down payment and what programs are available for you to get cash to do a buy and flip. Stay tuned, guys. Until next time, this is Karan Singh. Thank you.